Hey everyone, it's Andrew from Apex Trades. Here is going to be my trading masterclass. Now look, whether you are a seasoned trader or you're just starting off in the prop firm world, this one is going to be for you. You're not going to see anything to do with ICT concepts or anything like that. However, I'm not knocking ICT concepts. You know, it's a model. I just don't think it's a sustainable model over time because of the way markets constantly change. However, if you are an ICT trader, I have a course somewhere linked there if that's for your jam. Don't get this strategy or what I'm about to show you conflated with psychology. There's a difference, right? Whilst I use this and I've developed it over 7 years, I still fall foul to psychology. So that's not this, but it is a solid strategy that I've developed over time, and I'm going to give you everything that I do, how I analyze charts, how I get my day set up, what I'm looking for. And without further ado, let's dive in. So we're here over in TradingView, and the first thing I will do on any instrument that I'm dealing with, right? Let's say you've got a brand new Apex account and you're struggling to pass your evals and whatever else. The first thing that I will do before I'll do anything else is get some key levels. And the way I do that is to start off simply by identifying where the big peaks in liquidity have occurred in terms of exchange of contracts on the daily profile. So right now we're looking at NQ and we're on the daily profile. Now I'll simply add if I go into my toolbar here, you can see my toolbar, I'll add a horizontal line and I'll just click a horizontal line. Now I have that set up as a template. I've got lots of videos on templates, but you'll see one called VRVP daily, visible range volume profile daily. So this, what this is showing us is the extent of NQ way back from, I don't know, October 22. Each one of these candles is a daily profile or a daily candle. What I'm really doing with these lines is I'm mapping them to zones where there's spikes. Because what does that tell us? I mean, look where twice we've bounced volatility, right, where we get a big spike. So all I'm doing is mapping out, and the indicator I use is the standard one called VRVP. It's a stock indicator from TradingView. And then I'm simply mapping a line to anywhere where there's a little peak, because that for me, when price is moving, and remember, I'm on a daily, if I zoom into that 1 minute, right, there's a VRVP line there, there's another VRVP line there. Should come to no misconception why we consolidate around a VRVP line. And of course here we get another VRVP line. It's never going to be perfect and exact, right, because we're at that daily level. However, it's a good indication of where we should anticipate some sort of activity, because previously in the past that's where we've had a lot of volatility or exchanging of contracts. Really good thing to get you started with. That's the first thing that we want to go over. VWAP. Okay, now I've explained VWAP a number of times, but I'm just going to explain it again because I think it's a really important thing for people to understand. What we're looking at here is essentially a bell curve, right? That's the tip of the right hand side of the bell. There's the top of the bell, and then we come down to the bottom. Forgetting the fact that it's like changed and altered its shape. Like if I go like this image here, it's perfect, right? This is the bell curve. Now this is a standard set of data that we can use that isn't just aligned to trading, it's aligned to any kind of data set, and it's a well established principle that we see throughout any data set. Take this as let's say we've got 20 runners who are going to run a marathon, right, and we've got various levels of fitness, and let's say we could, if there was some arbitrary way to validate fitness levels between 1 and 10 being the most fittest person and 0 or 1 being the least fittest person, and let's say we've got 100 people who are going to run a marathon. Well then, what this data set tells us is that at the top end of the curve, right, so just to give you an explanation, we have this left axis and this bottom axis. The bottom axis is the most important one for me. It's the standard deviation away from the mean. Let's say of the 100 marathon runners, right, we have 5 being the mid-range fitness level and 10 being the most fittest. Well, the majority of those marathon runners we should expect will be somewhere within that 68.2%, right? 34% negative and 34.1% positive. If 0, right, was the midway point, which is 5, well then just shy of that might be 4.5, and just above the mean might be 5.5. Point being that the different runners will fall into different categories based on their fitness, right? So, you know, we might have some between standard deviation range 1 and 2 that might be a level 7. You might have some in between 2 and 3 that might be level 8, level 9 in terms of the fitness, and then you might have a very small proportion of those marathon runners that might be able to be, you know, peak of their fitness levels 10, but it's a small, much smaller number of those 100 marathon runners. You may only have 4 or 5 runners who are at that level. To the opposite side, which is negative to the mean, which is that 0 point, it's the same. We might have, you know, some who are maybe at 3, some who are at 2, and a very small proportion who are really, really unfit and maybe even shouldn't run the marathon. That is that standard deviation set that you see throughout anything. It can be tests, you know, children taking tests in school, and the average, you know, between like D and A star. It's just a data set. We're going to use that same data set to give us information on how price action moves, right? So the VWAP is the volume weighted average price. It gives us an amount of proportional weight of volume at specific price intervals, and it's a constantly moving target. So every time contracts are exchanged in and out, what it's going to show is the more volume that gets printed at a certain level, the VWAP will start to move towards that. And it's a slowly moving thing. Like you can see here, where price is kind of doing this thing here, you know, slowly but surely, depending on the amount of volume that's coming with price as its relative term, it's kind of in and around that. So it's like common sense. What does it tell us? Common sense tells us that value is VWAP, right? And if you're under VWAP and you're buying at better value. If you're above VWAP and you're buying, then you're buying at less than where the current session value is. So just thinking logically around the value, we want to use VWAP for us as a way to think, okay, well, when price starts to move away from VWAP, I need to think about what that means. That means that people who are selling, right, when we're so far away from balance, is not really getting a good price, right? Because there's where value is, there's where people are still trying to sell, right? And then of course, then we move in. So these bands, right, this red one, and then this emboldened red one, and then the green one, and the green one down here, they are the standard deviations. So VWAP is 0 on that chart that we looked at. These are the standard deviations relative to price and volume. So what this is telling is the more and more we encroach into these zones, it's an outlier, right? The price being at that time and that place at that period of time starts to become an outlier. And we use that, or I use that, as a way to think, okay, really interesting. Now I can start to think about whether I want to get in on a trade and reverse that market. So really key concept number 2, VWAP with standard deviations. I have standard deviations 2 and 3. I'm going to share my settings if anyone really wants to copy. So this one is by qualified, daily, weekly, monthly, quarterly, and yearly. I have all of the different standard deviations on. So I have the daily, the weekly, the monthly, the quarterly, the yearly. I have my standard deviation number 1 set to 2, so the second standard deviation, and I have my second standard deviation set to 3, because I'm only interested in standard deviation 2 and 3 because they are further away from balance, and that's where, as a reversal trader, I'm looking to get in. From a color perspective, I have my VWAP as white, and I have my standard deviations 2 and 1 to the resistance side, which is the top side of the bell, red, and a slightly lighter red, and then kind of the bottom sides I'm having green. Visibility, I only set, because I'm generally looking at smaller time frames, 1 to 5 minutes. I only have my visibility set on 1 minute and up to 5 minutes. Anything beyond 5 minutes, you'll find it will naturally not come on. If I set this to 15 minutes, VWAP disappears. If I set it to 5 minutes, VWAP comes back on. 4 minutes stays on, 3 minutes, 2 minutes, 1 minute, etc. I'm only really focused on 1 minute to 5 minutes for the VWAP, because quite frankly, it gets a little bit messy on the page, right? So next step we want to cover is Should I just enter because price is currently at standard deviation 2 or 3? No, is the answer. You do not want to just enter simply because price is at standard deviation level 2 and 3. Well, Mr. Apex, what would you advise and why wouldn't you get in at that level? Well, the key thing is understanding liquidity, right? So understanding where liquidity is relative to where price is, right? Now, liquidity is everywhere, right? There's no misconception that every time contracts are exchanged on an order book, there's liquidity here, there, and everywhere. But what we're interested in is where majority of liquidity is, or where we expect majority of liquidity to be. Now, for me, I'm always about objectivity. What's the difference between objective and subjective? Well, subjective is your interpretation. Objective is a universally accepted truth, right? So what are some subjective indicators? Well, an EMA, right? Why is an EMA? It's not subjective. It's objective in its idea, but it's subjective in the sense that if you're using a 9 EMA and I'm using a 21 EMA, and someone else is using a 50 EMA, and someone else is using a 200 EMA or a 100 EMA, whatever it would be, to enter a trade, there's no real gauge or value to that for me, because, you know, let's say we have our EMA on, let's just put EMA, right? We'll slap on a double EMA, I don't know, 50, right? And let's change this one to 200. Right, we've got 2 EMAs, right? Now, your trading style might be, let's say we're currently long, right? And you're bouncing off the EMA. You're saying, okay, I'm going to get in the trade when we hit this 50 EMA. I'm going to long each time we come across it, blah, blah. That's great. But what happens if someone says, actually, my trading strategy is I'm going to long when we're above the 200 EMA and I'm going to get in here, right? Nothing wrong with that. I'm not saying it's a bad idea, but they are not... that, you know, everyone's got a different opinion on what EMA or multiple EMAs they're using to trade an entry. So the idea of where liquidity is based on an EMA means that some people are going to use different ones. Not everyone's going to use the same. It means there's a split between ideas of execution on trades. So when we're thinking about where people are going to get in and get out, it's a subjective level, not an objective level. So that's that's the key thing I'm trying to get you to understand. So then, what would be an objective level? If you answer it now, where we are, I don't know how long we are in the video, but tell me in the comments what you think an objective piece of objective information is. Okay, objective is all about levels, right? So levels are things like previous day high, previous day low, right? Because, you know, price action for me is the same as what it was for you yesterday. So wherever that lowest level was will be the previous day low for all of us. Wherever the highest price was in the previous day will be the previous day high for everyone. Now, the reason they're really key levels is because the highest point in the day, on the lowest point in the day, something happened that reversed price at those levels. Usually, you know, a lot of money come into the market to push price down or push price up if it was lower. So we know at that level, there's going to be a lot of stops. There's going to be a lot of people who potentially might be expecting the breakout, right? So really good levels for big institutions who want to use multiples of orders, right? Where retail traders on NQ may be doing 1, 5, 2, 3 contracts, even some might be micros. Big institutions are orders of magnitude anywhere between, you know, 200 to, you know, north of 1,000. Now, you're never going to see $1,000 contract usually, but what you will see is a staggering of those orders at levels that continuously push price up. So that is what we've got to contend with. So objective levels, how do we identify our objective levels? And this brings me on to a beautiful indicator. I'm going to go to the 15-minute here just to kind of move around. Now again, look, just kind of dovetailing back a second, these daily VRVPs, now we're at a much more kind of micro level now, right? But you can see, you know, without me really understanding where I think price might get interesting, look, VRVP, consolidation, right? Consolidation, right? Where do we come back up to? VRVP. Where do we bounce from? VRVP. These are solid levels, right? That are over the history of time of where these levels are. So always think that they're a really good thing. Now they are slightly subjective because it's not a perfect science, right? It didn't reject directly dead on that point, but it was in and around that zone, right? You know, if we move up higher, again, we have a VRVP there. We've consolidated around that. Didn't quite get to this level, but it's in and around the areas, right, where we see a reaction at these zones. So really, really good stuff. But as I say, on to the next element. Now I want to bring in Spaceman BTC levels, right? These are phenomenal. So what these tell us is the activity from either the previous day or the current day, right? So we have London's high, we have previous day high. Now what did I say yesterday, right? That was yesterday's high. Now you can see just how our price kind of moved. Just zoom in a little bit here to make things a little bit easier on the eye. Okay, so this was the previous day. So when the day opens, right, this is where the previous day ended. So markets open up. Where did we come back up to? We didn't break previous day high, right? We got rejected from it. Come back down, come back up, come back down. Then we create the previous day low, and this is where the day ends. So that was a really fantastic short opportunity, right? If we looked at where we were on our VWAP at that time, so let's just understand where we are here. Let's go to the 5 minute. Now look at that. Came up to second standard deviation, right? There was the market open, come up to second standard deviation, didn't break previous day high, but think about it, right? You can get close enough to it to generate enough liquidity, because a lot of people might want to enforce their positions and start trying to short that market from the original short. So it's all about where liquidity would lie. And then of course, where do we come down to? We come down to here. Then we create our daily low. But for us, remember, the key is objective liquidity. So going back to that 15 minute, wherever it was, going back to that 15 minute, when we made this low, do we see anything objective? We don't, right? Which means I wouldn't have taken that trade, because nothing in there gives us an objective level that we want to be getting in at. However, you know, then what happens? Next day opens up, so we have some levels, right? But this was, I think, that the Friday, which was a bit of a mishmashy day, but price opens up, comes down, takes the previous day low. Okay, so this is now a really true level for us because we've taken liquidity. Let's go back into the 5 minute and see what happens here. Where are we? So we're here. We take the previous day's low, right? We're at third standard deviation. That is a perfect buying opportunity, right? That's where we'd want to get in, because we've taken previous day low. We haven't just got in straight away because we're waiting for that second or third standard deviation. Let's go into the 2 minute or the 1 minute. Takes the previous day low. Now we're waiting. We're thinking, okay, waiting for that trade. Hits second standard deviation. Maybe you're more thinking about third. Whether you get in here, there, or anywhere, it's still a really good trade. You've taken the low, you're in, and you're waiting for that rebounce off that point. But let's look at what happened. This is NFP. So again, this is the start of the markets. Markets open up. We go high. If we bring in this to the 5 minute, I mean, look at that. Previous day high right here in this light blue. What happens? Markets open, they remain bullish, kind of taper off a little bit into balance, which is VWAP. Hang around VWAP, break above second standard deviation, hits third standard deviation to the absolute dollar accuracy, and then of course we get that huge sell-off. That, I mean, it doesn't get any more perfect for that than for an entry. What does that look like in terms of points as a point move? Well, let's see. If we was to tag here to the absolute lowest, it's a 500 point move, fellas. 500 point move just by following some basics, right? Key liquidity level, out of balance, hit the short button, move the markets. Simple as that. Does not need to be any more complicated as that. And the reason I say that that's important is because you just need to think, right? Objective liquidity, where are my levels? Spaceman BTC, what do we have? We have previous day high, we have Asia's high, we have daily open, previous day low, Asia's a low, Asia's high, and where all of these are session-based levels, right? Asia's high and Asia's low, for me, finishes at 10 a.m. Once that finishes, I know where Asia's high is, I know where Asia's low is, and then we're moving on to London. London starts a little bit earlier, right? But We start to see where London's levels are then. So when New York opens up at 2:30 my time, or 9:30 normal time, we have some key levels then, right? We have Asia's high, Asia's low. We have previous day high, previous day low, if they've not already been broken. And so we're just sitting and waiting. When are we out of balance? I'm going to say out of balance. I'm talking about second and third standard deviation. And have we taken an objective liquidity? Bang, go for it. Have some nice, decent enough, tight risk management. And if it's wrong, right? Because sometimes markets can just trend. And when markets trend, you just got to get in and go with the flow, right? There's no rhyme or reason about it. You just wait for the pullback and get on in. But this is how I trade majority of the time, right? Now look, I need to preface this by saying the psychological element of this is, you know, sometimes I won't even follow my own strategy, even though I'm kind of trying to give you the insight into it here, or I get a bit restless, I'm impatient. If I just traded this and I had the psychological edge to just do this, I think I'd have no problem at all. And this is obviously my gift to you, because I don't know how many people trade this way, or how many people will show you this. You know, it's either ICT this, or, you know, equal lows, fair value gaps, all this kind of stuff. Yeah, that's great, but it's complex, and there's, you know, and I know it inside out anyway. I traded it for years before I kind of understood that it was just too messy and there's too many variations. This way, it keeps me honest, and I always understand what the market behavior is and what character it's wearing because of the VWAP, right? That is always balance. That is always true balance during that session. So we just need to use that and understand deviations as a way to say, well, okay, well, this is out of balance. Markets usually move with an intent and purpose. The intent is that it's looking for, if it thinks price is going to go higher, generally price will move lower first, right, to get better prices. Where's it heading? Some sort of objective liquidity, get everyone enticed into an induced move, whether that is thinking it's going to continue lower, or the opposite, thinking it's going to go higher, and you know, it's moving towards an objective liquidity level, and it's out of balance. That is all we need to focus on. Really is. Moving away from that to kind of understand, you know, how I then take this data set and give myself a bit of a bias for the day. I'm moving to TPOs, right? So TPOs, this is time, price, opportunity, right? This is essentially a variation on strategy in terms of time. So each one of these is essentially a daily session, right? A 30-minute daily session. This is the first 30 minutes. That's the second 30 minutes. That's the third 30 minutes. That's the fourth 30 minutes. So each time we'll get a full day's worth of trading volume on these levels. Now, what I'm particularly interested in is point of control. So this is where most of its time we spent during this daily session. So majority of its time, forgetting about volume or how much was traded there, this was the most amount of time we spent at this level. But the point of control was down here, because this on the left hand side is volume, this on the right is time, right? But what this tells me is when price doesn't spend an awful lot of time at a specific level, like here, that's what's called a single print. Now that markets don't like that, because that essentially means there's been no advertisement of trading opportunity during this zone here on that session, so it's created what's called a single print. And if we move back here, right, we can see how often single prints get closed. So, you know, let's start with this one, right? Huge big sell-off, single prints created left, right, and center. The mission of the market now really is to close those single prints over a period of time, right? So the next day we close this single print. This day we ate into this single print a little bit, but then we moved away. This created a new single print. This was kind of closed here. But then over the next few days, you know, the objective was to close the single prints. So when the next day price action moves into here, we're effectively closing those single prints because we've given opportunity to traders to trade in these zones. So we've still got this single print from that big sell-off still available. But of course, each day we create new single prints. These are now targets we want to be thinking about, that where we expect price to move to, right? We have single prints here. Then of course, you know, we move up, we close these single prints with this chart or this distribution, created a new single print, close these ones, so on and so forth. But now we've got a number of single prints that have still yet being closed. So the only ones that are open now is this single print. So there is for me, it's like always a background target in my head that I think, okay, well, we've got single prints that are left open from 2 or 3 days ago. So at some point, usually, you know, what can we anticipate if we just try to make this look a little bit clear in a second? This single print, how many days did it take for this single print to get fully closed? 1, 2, 3, 4, 5, right? So we had to wait 5 days for that single print to get closed, but it got closed. What about this one? 1. So okay, 1, 2, 3. So we've got 3 days at the moment where the single print has yet to be closed. We've had a pretty aggressive sell-off over the past few days in the markets. So I'm hoping that then when we start the week Monday, that we should start to see some slow momentum back into the upward side to at least close this single print. We would still remain bearish in this context, because if we just close that and don't close above the high, then it's still just a pullback, right? But it's always a nice idea to have in your head where single prints are and TPOs. So that kind of gives me an idea on where I think prices are going to start to eventually graduate towards. And then I use all of the other stuff for intraday trading, which is around, you know, waiting for price to get down, hitting that third standard deviation, making sure we've taken an objective level, and then price starts to move up. So let's try and put this theory into practice, right? I'm on a random number generator here, right? And I've got 1 to 100, and then whatever number it lands on, I'm gonna scroll back as long as I possibly can, and I'm gonna go to whatever that date, that first Monday was of that week, and then we're gonna do a full week of trading based purely on that system, and we'll see how we go, right? Generate 34. Okay, so going off of that, let's bring all of this in tight. Right, so it's all squashed. I'm going to go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34. Let's just use this day here, right? I don't know, we'll use this day as our starting point. Right, we're going to go replay, and we're going to go all the way back to here, and that's the start of our new day, right? So the trouble is we don't know what the objective liquidities are, because these spaceman levels don't go back to that point. So let me just switch this off a second. Previous high and low levels, let's see if we can bring them on, and then let's hit play. We'll use one mini as the order. We're gonna get in on second or third standard deviation, and we're gonna get out at VWAP. Or if we want to, you know, if this was a live trade, we might want to kind of use market structure as a way to guide it. We're going to go our 10x speed. We're going to hit play, and let's see how we do. Okay, new day opens up. There's the low. That's previous day low. Previous day high is all the way up the top. Got VRVP lines. Just open up a little bit. Wouldn't take a trade yet. Consolidating. Okay. Now, is this a possible location we would want to take a short? Let's go on the 1 minute. Maybe, maybe not. I don't know. Not yet, anyway. Let's hit play. See about patience, right? So, right now we have to be patient. Okay, we are starting to creep up. So now I'm going to... So we've taken what would be Asia's level, which was here, right? I'm now going to hit a short for a sell. Going to give ourselves a stop loss of, say, $500. And we're going to try to get out at VWAP if it gives us the opportunity. Let's continue with play. Stopped out, right? But let's just select bar at that point. So we've taken one loss. We're going to hit sell again, $500. Right, so let's continue with play. We want to get out our VWAP, so our TP is going to be kind of a moving target, but somewhere around VWAP, right? So price is going to be continuously moving. We was as high as $1,000 in profit there, by the way. Let's continue. There you go. So we're now 2,000. That's one contract, right? That was one contract which we got in. Our starting point was here when we got up and around our third standard deviation, took our first loss, but then we got back in with a $500 loss, $500 TP, and now we are okay. So let's just continue, see what goes on here. I would have a lot better refinement on this if I could see where my Asia levels, London levels, but because the Spaceman BTC is only operational on the day that you're trading, which because we've gone back in time, I can't see them. I'm kind of winging it a little bit, but let's continue. I mean, look, we've got third standard deviation right at a VRVP level. That would be a nice level if we can get, if price can come back down there. Trying to hit pause. But look again, bouncing off the second standard deviation. If you took that long, fantastic long again. We'll run this on 5 days. Okay. Right to the VRVP. Look at the bounce. If I go back at bar, it's going to remove my $235 profit. But let's just keep that. No, we won't. Right. I won't. But I would have got in there. And there's our previous day low, right? That's still where a really good liquidity target would be. So let's see if we get in there. I'm going to slow this down to 3x because I don't want to lose out if it comes down there, because that would be the most amazing place to go long from, because it's the previous day low plus right at that third standard deviation. Let's speed that up a little bit more. Maybe go to 5. No, it's a new day. Here's our previous day low. Just waiting. Okay, so now we're going to go bar by bar. We've taken previous day low, right? Which is great. I'm going to go down to 1 time speed. Or in fact, no, let's leave it at 10. But what we're going to do is we're going to step it bar by bar, waiting for third standard deviation to get hit. Bang, perfect. Now we're going to go long with a buy. Give ourselves $500. Get our jail free card. Let's go on again. Where we want to get out? Ideally VWAP, right? So let's put our TP at VWAP. So we're going to get stopped. Okay. Now we have to still hold for a bit. We can't get in straight away because now we're not at our level, right? So let's just bring this on a little bit more. Get in at seconds if it comes in. I'll go long here. Missed the opportunity. It would have been on that one, but let's go buy. Give ourselves... The reason here is because we've already taken the low. So we've taken that liquidity. And I'm still anticipating. The other thing we need to add in, which I forgot to talk about, was pivot points. Okay. Let me just do some manipulation very quickly here. Pivot, I want to be white. I want the support to be green. 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 And these I want to be red. 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 Red, because these are also objective levels, right? So there's the pivot point there, which would have been, there's pivot point, which is white. So S1 is here. So we've already taken S1. We've already taken previous day low. I'm feeling confident about this move. Where do we think we want to get out? Let's look. Let's not just use TPR VWAP at this moment in time, but let's instead look at market structure as a way to manage the trade. Could get stopped out again here. It was very close. Right at that structural low. Have some new consolidation here. Okay, can we break above? So we want to at least bring our stop here. Okay, we have a new structural low there. So now, because we're above VWAP, we can afford to be quite tight, right? Maybe just go underneath that level, this little shelf here. Okay, so 248. So this would be day 2. Let's say this was Tuesday. Now we want to kind of move it on a little bit. Remember, this is where's our low for the day? We have R2 here, and we have a VRVP. So it looks like markets have opened up for New York. Let's just bring this down a little bit more. Let's see if we can get into that S2. Perfect. Not quite. This is the level we want to see get hit. We've just taken just below the VRVP. Can we get another low to break S2? And in that second standard deviation would be amazing. Big sell-off would be good. Break. Okay, now I'm going to go long. We've taken S2 and we're at VRVP. So we're going to hit buy with 1. Bring ourselves a $500 stop loss. Because the volatility's gone higher, it's a lot shorter of a distance now. Let's continue, move. If we get hit, I'm going to go straight back in. Okay, buy. Take another $500. Just because we're at second standard deviation. Right. I'm going to go again. Continue. Nice. We'll see rejections. That price moving a bit higher would be good. Okay. Go in again. Buy. The difference here is rather than holding the trade, you take the loss. So we've taken away pretty much all of our gains. Well, we've still got 470 from the previous 2 days, I think it was. Let's continue. VWAP's quite far away. Okay. Wow, look at that. So we want to at least be under the structural low. Beautiful move. We're at 3,000. Let's just continue on. Okay, if we make a new high here, I want to go underneath there. Okay. That locks us in for some nice profits. We'll just go, say, here. Let's continue. Wow, so now 4,000 odds. You know, realistically, we are coming into the opposite side now of that curve. So we've got to be thinking whether we want to take profits here or do we expect that price is going to continue up. I mean, I want to at least bring this up to here. Right, to lock in some nice profits. Okay. Locked in 3,000. So we're up 3,000 on the week so far. I think we can probably allow this to play out at 10x for a bit. But I mean, that would have been a, you know, okay, we're going to pause, right? Because now we're at VRVP and we're at the height and we're at the third standard deviation. So let's try a short. Give ourselves a $500 stop. We're on one contract. Let's hope this doesn't wipe all our gains, but let's see. First one out. Sell. 5. Okay. So based on the fact that we had such a bullish move up, right, you're going to want to be really tight here, right? Just to at least give yourself less of a break, because with such a move like that, that's usually a trend that you maybe don't want to get on. Now, imagine if we were to held that long, which was already at nearly 4K. But let's continue on. Stopped out. Maybe now I'd be thinking, do I want to be fighting the trend by reversing this, or instead getting back in on the trend? But I'll stay true to the strategy, right? Well, you know, right now we need to wait. This was a perfect entry because, and we did have opportunity to take profit, which we didn't. But we're at third standard deviation. Now we're kind of just above second, so we're just gonna hit it on a little bit. Okay. Now we're at S1. Sorry, R1. But whether we want this S2, and we've also got monthly and monthly and weekly VWAPs up here. Let's just not get in just yet. Let's see if we can get up to that third or somewhere close to. See, so we've got a daily VRVP. Let's take a short, because now we're at that area where there's a lot of previous activity. So we'll try a short. I mean, very unlikely we're going to get all the way back down to VWAP, but that would be a monster move. But let's play it out. But you see how these VRVP lines are so powerful? Like, why would we consider that would be the area? I mean, we've got VWAP there for quarterly. I'm going to go back in again. Okay, go back in again. See how powerful that them weekly and quarterly VWAPs are. Really good stuff. Now, if we're looking for a TP, I mean, ideally we would love, and we're going to trail this, right, to get somewhere in and around that. Let's go at 10x speed and let's see where we go. We'll bring this up to VWAP. But even now, I mean, that's 2920. So at least we want to cover the high there. And then we're going to carry on watching where we go with this. Let's bring this up a little bit. See if we can continue with the level there. And then we want to try to maybe get this at VWAP if it wants to play. Add a little bit more. Bring this down here. What time is it? So the markets are going to close now, right? Literally, markets will close. So because it's at 5:59, so we're going to close this trade. That now puts us on nearly 7k for day 3. That would be the Wednesday, let's just say. Here's a new day. This is just playing the same system, right? So right now we're just kind of waiting. Where was previous day high and previous day low? Let's just map that out quickly because I can't remember. There's high there, that's already mapped. And there's low. So we have high and low mapped out. We've got our pivot points on the page. We've got our data set. So let's move it on. Let's wait for something key. You know, right now we're not really bothered. There's no real objective liquidity in these zones, so we're not really thinking about where we want to take profit yet. Sorry, get into a trade rather. Maybe at VRVP there's an interesting element, but we do have the previous day high here, so maybe we don't want to be getting in just yet. Still nothing to get too excited about yet. Probably have to wait for New York on this session. Again, you know, you might think there's an opportunity to get in here, but there's no objective liquidity at this stage, so we're just going to play it out for a little bit longer. It's just like markets move with intent. You know, where's it going right now? We don't know, right? It's just kind of doing this thing, which is why we've got to stay on the sidelines. Still nothing yet, but markets have started to shape up a little bit. Let's continue. Let's wait. This is the pivot point, the white line here. So that's an opportunity. Let's just play it. Okay, markets have opened up. Ooh, not quite at the pivot. Let's just continue. Let's just see where we are. But it was a lovely move, third standard deviation, but we want to get out of VWAP, right? So let's just continue. Let's continue on. Ideally, we want to see us taking a high. Trouble is now we haven't taken the low of previous day, but we've taken the low of the session, right? Which means there's a potential for a breakout and an extension on that breakout. So it's a risky move to go short. Coming to the previous day high. No real trades. I mean, there was opportunities, but if you were playing the system exactly what we suggested, then probably no real trades to take there. This has been my trading masterclass. It's you know, a bit of an overview, some of the stuff that I don't think you'll have probably seen, generally speaking, on how people trade. Drop any comments you have in the YouTube page. Let me know if there's anything you like, dislike, or change, or if you just have any questions in general about the system and about how I kind of use it. And I'd be happy to take it. Now, the reason I said that psychologically I don't always follow my own ideas is like, look at that. I was on my live account, and that was where I got absolutely caught out by NFP. And I wasn't in a position to close it fast enough, and I just had to roll with it, right? And that was a big kick in the balls. But I'm still in the trade. The trade is still open, right? If you go here, that trade is still open, right? Because I'm allowed to trade overnight because it's a live account. It's not a prop firm account. It's a live account. And we'd have to say the only thing that I've got going for me in the analysis is that I think price is going to start moving back up to these zones because, in all honesty, it's a single print. Price hasn't advertised here. Markets don't like that. You'll see it over and over again if we keep going back as far back as we want to go back to. You know, wherever you see single prints, so only how far I can go back, you see that they get closed, right? Anyway, drop your comments. Make sure you hit like, subscribe, anything you want. You know, if you want to join our Discord server, ask me any questions live there and get a much faster response. Also, feel free to do so. With that being said, I'll leave it there, and I will say thank you for watching.